perfect day to talk to Bruno Caratori, COO, co-founder at Hashdex. Good morning to you. How are you feeling today as you see Bitcoin above the 100,000 mark here? I'm looking at the futures. Some of your thoughts on what's going on.
Hi, Nicole. It's great to see you. Indeed, it is a good day. But as we look into Bitcoin and every other crypto assets, Nicole, we think that as we talk to clients all over the countries that we serve, it's important to know that what matters in the short term matters a lot more, a lot less. So Bitcoin will hit 100,000. It may pull back a little, but we urge clients to always keep the long-term focus in mind. And this is so important for Bitcoin.
So it's interesting because I do want to get to Ethereum, but Tom Lee from Fundstrat used to be at JP Morgan, had 150,000. He said he would likely hit that by the end of the year. There was another guest recently who was saying 200,000. People are up to 200,000, 250 going in for 2025. Do those seem crazy to you, or something that can happen because Bitcoin is a limited asset?
Nicole, they don't seem crazy. It is definitely possible. As we described the value proposition of Bitcoin, so think about it. Bitcoin gives us this fixed supply, non-sovereign asset that's fundamentally different from every other asset class out there that's poised to maybe create a new store of wealth. And think about the parallels that Bitcoin has, gold with its own market cap, or even things beyond gold, US treasuries. There's so many assets. These are multi-trillion-dollar asset classes. And if Bitcoin were to reach the market cap of gold alone with its supply that we know is quite certain, it would need to be at a price at over $1 million, Nicole. So thinking about $200,000 in the medium term is definitely something that's feasible.
Wow. Okay. So people who like to hear that. So would you say that there's not enough Bitcoin to meet the demand?
Nicole, I think the demand is still low right now. As much as people talk about Bitcoin, the truth is that most people don't own Bitcoin in any form. They don't own Bitcoin, physical in their own digital wallets. They don't own ETFs. So the demand is still very low. We're still poised to see a lot more adoption of Bitcoin as an asset, as a store of value. And with this is going to be, of course, a big driving force in the price increase that we expect to see, maybe not in the coming weeks and months, but definitely in the coming years.
Yeah, and I think about institutions now, it became much more prevalent, as you noted. A lot of people don't have Bitcoin. I would agree with you on that. I mean, it's an exciting concept for many, but they're not there yet, so there'll be more demand, I'm sure. When we think about now, you have the big houses buying it, you have ETFs, and even Ethereum, too. I was reading this morning that Ethereum was sort of left behind a bit. I know it's like the smaller, younger sister or brother, but there's still possibilities there as well, right? Big possibilities?
Nicole, what we think often gets lost, especially since the election, is that it's been way more about not Bitcoin and even not Ethereum than otherwise. But you're right, since the election, Ethereum has gained in price for sure. The long tail of other digital assets has also gained. And think about, there's a specific cost to this. With the election, beyond just President Trump being elected, there's a new makeup of Congress now, Nicole, that everyone knows will be a lot more welcoming towards crypto. And the truth is that for assets that are not Bitcoin or Ether, there has been this dark regulatory cloud hanging over them for many years, with entrepreneurs and projects being afraid of being sued. And everybody's read now is that this cloud is dissipating. Ethereum is actually a direct benefactor of this because a lot of these protocols use Ethereum. So that's why we're seeing a lot of value being accrued to Ethereum now. But we think that other assets in the space of DeFi protocols will also be gaining a lot of attention and a lot more opportunity for price increase in the near future.
So for investors, what do you recommend to them? Do you recommend to them to buy ETFs or stocks with exposure or the cryptocurrency digital asset itself? What do you tell them to do? What's the best way to do this?
Good question, Nicole. We manage ETF across over 10 countries. Our flagship product is actually an ETF of a broad market representation index. So unsurprisingly, we're big proponents of the ETF, but not just because of ourselves. We think that ETFs are this very easy, very low friction way of investors to gain exposure to an asset class that they're already used to. So it turns out that, especially nowadays, owning crypto assets on your own is still quite a complex chore. It's a complex task. It requires a lot of technological understanding that you don't want to do on your own, but you get access to that asset or to those assets in your portfolios if you buy ETFs now, which is a quite welcoming thing to have.
Yeah, understood. What do you tell folks when they're worried about the risk involved?
Bitcoin, Ether, all the other assets, of course, have risk under them. And the way to deal with this, Nicole, is to calibrate your positions, right? Ultimately, everyone that's making a bet, even on Bitcoin, is making this big technological bet, this bet that crypto assets will gain more and more acceptance, will gain more traction by finding use cases. And it may turn out that not all of those materialize, okay? But the reward, if and when those materialize, are so large that they're well worth to have in your portfolio. But you need to balance this risk. You need to calibrate your position. You need to constantly rebalance. There's all the old adages of good portfolio management: dollar cost your way in, dollar cost your way out. Keep your portfolio constantly balanced. Are tactics that have worked for every asset class, and in crypto it's no different. I would argue has worked even better, despite the big drawdowns that we've seen in the past, despite all the uncertainty. Those who followed those principles, Nicole, have fared very well for the past several years of investing in crypto.
And then what about Dogecoin, Solana, some of the other things that people like to talk about? You want to expand it out for those folks?
Absolutely. So, Nicole, I would argue that these assets are in that group of assets that I mentioned earlier that have been big winners of what happened since the election, right? And it turns out that these assets did not have a regulatory status that was understood. Projects such as all the DeFi protocols out there, the decentralized exchanges, the decentralized lending protocols, they all had this fear of some regulatory action. And now, given that, with the new Congress, there's great expectation that the bills will pass, that the stable coins bill will pass, the bill that will regulate market structure and finally define how these assets and how the exchanges should be regulated and who the regulator will be, whether it will be the SEC or the CFTC. If and when this happens, these assets will be in a better position to thrive. And Solana is definitely one of the assets that has been in this limbo, I should say, but there are many others that stand to benefit from this.
Yeah, and I will leave you with the thought, and I'm sure you're on the same page because it sounds like you're saying a lot of the same. So the folks that are immersed in this or see opportunity in this, we had Kathy Wood of ARK Invest saying much of the same, and that the new administration is likely to bring some much needed clarity, regulatory clarity to Bitcoin and the other digital assets, particularly when Gary Gensler steps down. So that helps the group overall, which is what you've been saying too, Bruno. Thank you so much. Bruno Caratori, thank you. Over at Hashdex.